Investors are dispelling fears over an adverse effect of the coronavirus outbreak of the global economy. China's authorities are taking measures to revive appetite for risk, so it makes sense to shift focus back towards the economic calendar. On Thursday morning, market participants will set about active trading in the AUD-USD pair, which is viewed as a barometer of risk sentiment in the Asia-Pacific region. Apart from the level of risk appetite, market sentiment on the Australian dollar will depend on retail sales data and trade balance in Australia. Both metrics are expected to be negative. That will convince the Reserve Bank of Australia of troubles in the domestic economy. Notably, these metrics refer to December, before the coronavirus outbreak dealt a blow to China's industry, the key consumer of the Australian commodities. At the latest policy meeting on Tuesday, the Reserve Bank of Australia made a surprise decision to put the official cash rate on hold at 0.75%. However, investors do not share the central bank's optimism, so any reminder of the weakness in the national economy is set to trigger sell-offs of the Australian dollar. Nevertheless, if the actual data is better than the forecasts, the Aussie will face a challenge next day. On Friday, the Reserve Bank of Australia governor is due to speak. Besides, the regulator will release a quarterly report which gives insight into current economic conditions and contains forecasts. Any hint about a rate cut and concerns about low inflation will be bearish for the AUD-USD pair. A bit later, traders will have an excuse to sell the AUD-USD pair, as China will report on its trade balance for January. Analysts expect contraction in China's trade deficit amid a decline in both exports and imports. Experts reckon that shipments of commodities to China shrank by 6%. China's trade data will arouse interest among global investors. Indeed, a signal about a looming slowdown in China's economy, the world's largest export-reliant economy, will boost demand for safe haven assets, including the yen and the US dollar. Eventually, on the final day of the week, investors are anticipating a crucial report on the US labor market. After worse than expected employment in December, the markets have cautious expectations for January. Analysts expect the US private and public sectors to have added only 160,000 new jobs. If the forecast comes true, the US dollar will strengthen in response. Besides, the US dollar could receive solid support from the fact that average wages edged up to 3%. Such information will signal that consumer inflation is likely to gain momentum in the short term. This could assure the Fed Reserve to raise interest rates. By the way, the USD CAD pair will be under the spotlight on Friday. Canada is also due to report on its employment. The consensus for January is rather pessimistic. Canada's economy could have created only 20,000 new jobs. Analysts assume an uptick in the unemployment rate to 5.7%. In addition to the above-set events, traders will take notice of other important data. On Thursday, don't miss a series of data from the Eurozone, such as factory orders for Germany, as well as economic forecasts from the European Commission. Traders will be alert to rhetoric in a speech by ECB President Christine Lagarde. In the United States, the economic calendar contains a batch of reports that will shed light on non-farm payrolls from the Labor Department on Friday. The traders' calendar is more loaded with the macroeconomic data on Friday. Germany will provide data on industrial production and trade balance. Canada will release IVPMI. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.